So we'd love to keep you posted about the developments in fintech, of course, what's happening this week, as you're used to from us. And I always do that together with a great host. Today, I'm really glad that Michael Kent from Azimo was able to join us. Michael, very much welcome on the show. Really happy to have you here. And you're currently in London, right?
Yeah, thanks, Don. Live from the spare bedroom in North London.
Great. Yeah, great that you could join us. Of course, getting up a bit earlier here than on the continental side, where we just have an hour for sessions like these. No, very much welcome here. And first of all, I'd really like to introduce you a bit to the audience. You're, of course, one of the founders of Azimo and CEO at the moment. Azimo, very active in remittances. So what's going on there at the moment?
Sure, yeah. So I'm actually the chairman of Azimo. I have a fantastic CEO in that business. I'm a serial fintech investor. I started Tandem Bank. And yeah, I've been doing quite a lot of fintech investment on my own, and also I'm a venture partner at eVentures, which is an investment firm. Yeah, I mean, it's been a kind of crazy few months. I mean, I think everyone can agree on that. Certainly in digital fintech, consumer digital fintech, which is where Azimo operates, it's been a good pandemic. I would swap it in a heartbeat for no pandemic, because I think the implications for our economy and our society are horrible. But actually, in terms of the business metrics, everything's been going up and to the right. We've seen a very strong growth, and I think that's really it's been written about a lot, but the acceleration towards digital in lots of sectors, in retail, in food, but also in financial services has really benefited us and other businesses like us. So I think that's what we're seeing. I think there's some challenges that everyone's facing, which is keeping a team motivated, keeping culture going. Particularly now, it's sort of 5.5 months later. It feels like it's grinding a bit, and the weather's going to get worse, as you said. Thank you for making me feel good by talking about the weather. That's what British people like to do. And yeah, I think we just need to work out ways of keeping ourselves energized, focused. But yeah, as a sector, I think I'm thankful every morning when I wake up, even if I have to wake up early.
But I think maybe to pick on that, I think you're basically used to doing business all across the world, right? I mean, your customers have a really broad base, and so does it inspire you in a way to also deal with the remote situation work-wise, or maybe do you have other tips for our listeners?
Well, I mean, I think we're all feeling our way. I talk to a lot of other payment CEOs, and I think nobody really feels that they've got the answer yet. I think what most people think is probably not the right time to make huge decisions about how you run your business in future, because we're in extraordinary times. And they say you shouldn't make big life decisions during a crisis, personally, and I think that's probably the same for a business. But we are, I mean, the office has been optional working for the last sort of 6 weeks. When we opened it again, we're trying to encourage people to get together, because we think the most important thing in a business is its people and its talent, and the connectivity that comes from different parts of the business, spending proper time, more quality. Beautiful as it is to chat on Zoom, you don't get the same level of social and sort of context and cohesion. So we're encouraging people to do that. We're very lucky in the infrastructure sits in the cloud. Zoom worked. We operated in 3 hubs: London, Amsterdam, and Krakow anyway. So that kind of all worked already. But yeah, we haven't decided to go fully remote. We haven't decided to order everyone back into the office. We're sort of sitting somewhere in the middle. The really good news is that engagement levels among the team are way up. So people are more engaged. And it's also forced. I think a lot of management teams will see this. It's forced us to be more, decisive and methodical and better at our communication. So we really do answer questions from everyone in the company, talk to the whole team once a week, and perhaps sometimes you just assume that stuff was happening and you assume people were engaged, and actually now we focus on it as a business, and that's probably a good thing.
Yeah, I think it's definitely it's easier to be aware that you might not be aware. And actually, what you told us in the preparation call, I thought it was nice also that you gave the option to your team members to ask anonymous questions.
Yes.
Right.
Yeah, it was a great idea. We brought it in a few weeks, and we have obviously, like everyone else, I'm sure, have a weekly all hands call. And we found that the question and answer session was a bit slow because we put it in an anonymous platform which allows you just to type in your questions and they'd all come through. And we got all the tough questions. We got are you considering layoffs? We got what's going to happen to bonuses? We got are you reassessing the company's strategy? All of the things that people want to know, but maybe don't always want to stick their hand up in front of 200 other people and ask. So that's a good, not always completely comfortable for the leadership team of a business, but it's kind of like, it's something that plays very well.
Yeah, I think I thought I really liked that idea. So I think that's really a nice one. It might be a good example also for other companies to give that a try if they haven't yet.
Yeah, for us it was. I got the idea, or actually somebody else got the idea from another company, and it's fantastic actually. So if you can share my details, happy to tell people how we did it.
Yeah, cool. I think that's really nice. And so you said like the business is actually going pretty well. Indeed, we see that let's say digital solutions are being picked up quite fast at the moment, as people don't like to go to branch offices or deal with physical money anymore. How did that go for remittances? Was it a straight line up, or how did it go?
So, I tell people this story. For the first 2 weeks of lockdown, it was actually, frankly, pretty terrifying because what you saw was as these measures came in, I think it hit a lot faster than perhaps the global investor community, the financial markets, and most businesses were expecting. So we had a couple of weeks end of March where actually transactions fell, customers fell, and the pound and the euro, which is we send money around the world, and so most people are sending euros, or they're sending pounds, or they're sending the Scandi currencies or Swiss francs. Those every currency, maybe except for the Swiss franc, dropped precipitously against the dollar as global investors moved all the money back to America. The safe haven, and that effectively made it look like our prices went up by 10 or 15%. And so we saw a very sharp contraction in business, and that was a real worry. Coupled with that, nobody knowing quite when the peak was going to be reached. There's a lot of fear, and the financial markets were down by a third. You remember those times; it was pretty intense. And actually, at the end of the month, what we saw was a very big surge in new customers as people realised that they still had to send money, but what they didn't want to do was go to a Western Union or MoneyGram location. And then we saw a very strong pickup through March, April, May, into June, and just really, you could really track our sort of excess growth. I mean, the company's growing at 40-50% year on year anyway. So, but we saw a sort of a doubling of the growth rate over that period because it provided an alternative that people felt more comfortable to use. Actually, interestingly, the biggest source of that growth was referrals. So we have a mechanism in our apps where you can tell your friends about how to use Azimo, and they both parties get paid. They get a referral fee, and that actually having that mechanism in really worked. So yeah, that's what we saw. And then I think August has been quite slow. It's traditionally a slow month anyway. It's holiday season. And then, I think longer term, whilst business has been good, we're sort of thinking about how the economy is going to shape up over the next, probably 6 months, really, because actually what we've seen is very little impact from the pandemic on people's, personal financial situations. And I can see that across not just Azimo, but across a load of fintechs that I'm involved in. People actually have more cash at the moment. They're not going out. Their disposable income levels are much lower than they would historically be. Very few holidays, very few eating out opportunities. So actually credit is improving. Credit cards are getting paid off. People are continuing to remit money. And we're very lucky because in Europe, the governments believe that, in a situation like this, they have to protect people's incomes. Not quite the same in the United States. So there's a lot of fiscal stimulus that governments are doing, which supports, consumer spending and things like consumer remittances. So I don't know when that ends, and the Germans have just extended it for another year. But when that sort of fiscal stimulus ends, that's when we think we might see a sort of a dip in business. But nobody knows at this point. It's hard to make predictions.
No, exactly, and I think it also depends a lot on let's say the industry that your customers mostly work in, right? So if they work a lot of in temp jobs, where you see that a lot of at least internationally traveling people have relatively flexible labor contracts, that might indeed be hit harder than people with fixed contracts, for example.
I think the one thing I always say is, if you think about my customers, and I know this is a specific sector, but the people that we serve are generally first generation migrants, and what they've done is they've made a decision to leave home, leave family, leave friends, leave social connectivity, leave their language that they're comfortable in, move to a different country, try and make the best for themselves and other people. And they're hustlers, they're the brightest and best of their generations, and they're really, this is not a community of people you'd want to bet against, and even in 2008 and 2009, I was running a big money transfer company in Spain, which was probably the epicenter of the financial crisis in Europe. And what we saw there was we did see a decline in average transaction volumes, but we still saw people sending, because this is important money, and no matter how bad it is in the Netherlands or France or Spain or Italy or the UK, it's going to be a lot worse in the places that the money's going. Sub-Saharan Africa, Middle East, Southeast Asia, and Latin America. So, yeah, these people hustle. Customers hustle, and this is not this is more like bread than diamonds in terms of what we're seeing.
Yeah, true. Yeah, it's a fair point. Do you also see a lot of geographical spread? I think we saw this week some news coming out that there's quite a strong variation, for example, in the countries in South America, in how strong their remittances were growing over the past time. Do you recognize these patterns, and can you sort of identify which kind of countries are prone to have more or less of remittances?
Yeah, I mean, so it's interesting, and sometimes the data is quite questionable, but it's the best we've got. I think what's surprised everyone on the upside is that how robust the remittance flows are. So Mexico last month had its highest level of inbound remittances ever. So, and it's not what you'd expect, 4 months into a pandemic, particularly not given the way the Americans are handling it. So, yeah, it's quite pleasing to see that. Unfortunately, some of that is due to the sort of collapse in the Mexican economy and the collapse in the peso.
The need basically for the money, right? Yeah.
Yeah, that relative foreign exchange means that anyone who's got any money that they've saved in the United States in dollars is probably going to be sending it back now. But it also talks to the sort of the robustness of these flows, and these are millions of individual financial decisions that customers are making. And largely, when we talk to them, we understand that they're doing it because it's underpinned by a growing and greater need on the receive side. But yeah, we see quite a lot of variation. We see foreign exchange impacts it. We see, as you say, sort of the sector that those particular migrants tend to be employed in impacts it. There's a whole bunch of things, and then of course. In certain markets, there's been quite a lot of stuff happening in the sector in terms of, Finabler, which was probably global number 3-4 money transfer company, just exited, went bust. $1 billion company to zero in a few weeks. So there's also that market. If you layer on that sort of market activity piece, it's a pretty complicated picture. But remittances are robust.
No, exactly. I think, and from that perspective, it's also quite an interesting model for partnerships. I would argue, especially since, let's say, if you talk about people's financial situation, you can imagine that, for example, neobanks would also be interested in remittances business in a certain way, or at least adjacent businesses. How do you see these kind of partnerships shape? Do you feel that there's going to be sort of these kind of combination of financial services somewhere in the future?
Yeah, I mean, I think one of the idea of cross-selling opportunities is comes in and out of fashion in financial services. And I remember when I first got a job in the sector, like a long time ago. Let's not go into how long ago. Everyone was talking about cross-selling, and then it was unbundling and being specialist, and then it was bundling again, and it was cross. It comes in waves. I think there are 2 reasons for companies to combine. Generally, you have a sort of combination of strength where there's synergies or there's cross-selling opportunities, countries, or there's geographic reach, and those things are you've seen a few of those over the years. There's lots of deals in payments, lots of deals in fintech generally. There's also a reason, which is when somebody is weak, or two parties are weak, and they want to come together and make a more powerful, company, and potentially. So you can see stock deals happening more and more, where companies there's no money that changes hands, but they say, look, if we team up, we've got a better chance of getting through this. So there's sort of the distress M&A, and that both of those are I think happening, and a lot of people are probably more open to partnerships now, because I think the other piece of news that's in the sector is, whilst you still see these big investment rounds happening, they're happening less. And when the money comes into companies that are fundraising, the investors are being a little bit more cautious on what they think the management team should spend that money on. So. And in a situation where maybe you can't do the 5 or 6 product extensions that you want to do, but you still want to make sure that you're tackling those elements of the market, partnerships are a great way to do it. So I think if you can't conquer the world on your own, tying up with other people and other companies is a great way to do it.
And do you believe that, you could basically, traditionally we always look at consolidation or indeed fragmentation of the market, but I think increasingly, especially with the rise of APIs, there's also much more possibility for collaboration rather than co-ownership, right? So I think we'll get used to that way of collaboration, because I think it's still, we're a bit fixed in the traditional idea of, I have to buy a company to collaborate, especially in traditional financial services players are inclined to do that. But I think sort of the more free collaboration through technology enables a much more different constellations, I would say.
Yeah, I think one of the and it was there's a Frank Rotman piece in the sort of news this week, where he talks about enterprise fintech and embedded enterprise fintech being the hottest area in fintech. I totally agree. Where you're building technology that really underlies a lot of the consumer technology and consumer offerings. That's a great place to be. And that sort of the infrastructure layer, which it used to be the infrastructure layer was just really the cloud provision that sat behind everyone, but now you've got payment infrastructure layers, you've got lending algorithm layers, you've got reg tech and all the KYC, and I think those sort of commonalities and that's going to be where the next set of unicorns come from. And it does also make, if you want to get together with somebody and you share 3 or 4 of the same back-end providers, and you've got decent APIs allowing you to hook your 2 systems together in weeks, not years, which it would have been normally. Just go and ask the CTOs of the big banks, the sort of Santanders or the BBVAs, who've grown by acquisition. Not only do they have one monolithic stack, they've got 7 or 8 of these things, and they're sort of really trying to knit them together. Fintechs, I don't think, or next generation fintechs won't have that problem.
Yeah, I think so too. Although I do believe as well that generally every generation of software will become legacy at some point. Right?
Yeah.
I even heard from some company that said, every 3 years we throw all the software in the bin and we start anew. Well, I think that's also kind of might be over exaggerating a bit, but I think in general I can also sort of imagine a bit that once you're hooked to a certain stack of software, it's pretty hard to get beyond it. Yeah,
I think the philosophy actually is if you move towards just having a consistent architecture and a microservices deployment, then you can pick out and throw away microservices and the technology that underpins them from time to time. But as long as you're sort of, I think the API microservices modular stack is probably with us for the next 20 years. But what do I know? I won't opine on technology matters. But I think you're right. Everything becomes obsolete. And what was a competitive advantage 10 years ago is a legacy disadvantage these days.
Yeah, I think there also you see, of course, that the regulators play an important role. So, for example, also you saw this piece this week by Ron Shevlin, renowned VC, claiming that we should not consider the neobanks as something special anymore. They're beginning to behave much more like other banks, and I think already I heard a lot of neobank CEOs basically proclaim the same, which has a lot to do with the fact that I think the regulator just hands out, this is the blueprint, you just go and operate it. We'll tell you what to do. It's becoming pretty hard to be discriminatory from that perspective.
Yeah, there's it's not just that. It's the fact that, you know, what is the point of having a banking license? It's very hard. It's very expensive. And it's, you know, there's a huge amount of maintenance that needs to take place to own a banking license. And the best point of having a banking license is a zero cost of wholesale funds, or close to zero. So you've got lending. Banks exist to lend money. You know, primarily you can get payment banks and you can get sort of consumer card banks, but you might as well be a prepaid card at that point. I think that's something that the neobanks are sort of waking up to. If they really are banks, you know, if they've got banking licenses, they credit is where it's at. So, you know, yes, and credit is hard. You know, credit is it's very easy to hand out money. You know, getting it back is the tricky bit. So. And I think also, of course, building a credit book or a loan portfolio in a pandemic is also something that's hard to do, because, you know, there's adverse selection, particularly on the consumer and business side. You know, you're lending money to people and they can't tell you what's going to happen next week. So it's hard for you to take a view on that stuff. But yeah, I think neobanks are all moving towards, you know, becoming a bit more like normal banks, which is, you know.
But so which I very often take the position that actually basically having a banking license might actually prohibit you to actually create a favorable customer experience. And I think so. I think it's quite likely that let's say a party without a banking license might be the one that actually takes on sort of the front end of finance, because they are actually much more able to bring it all together in a convenient way without having to worry about all the compliance at first before they actually start thinking about the customers.
Yeah, no, absolutely. I think that there's still this battle for who's going to own the front end customer experience. I think actually one of the most interesting things that happened in the news, and I know it wasn't this week, was Ant Financial filing for its IPO. And if you look at it, it's worth a read, people. I mean, it's a monster 200+ page document, but actually if you look at what they're offering as a sort of digital front end into your financial lives, it's mind-blowing. You know, you can invest, you know, into thousands of mutual funds, you can get micro loans, you can do literally everything from you know, it's democratized financial services completely. And that front end is, you know, not just them, it's third parties as well. So they're really just owning the customer, but offering, you know, lots and lots of other people's good services related to finance. So yeah, it's pretty amazing to see how that's going to work out.
No, I think it's a really nice example. I think it all sort of indicates where, also from a customer perspective, people actually would like to go, because I think that case is just really strong. But indeed, you see that regulations are, I think, the ones sort of determining how the play will play out. But it's also quite likely that, let's say, the US firms will try to go a similar route with regard to their grip on financial services, would be my expectation. I think that's also what you see now, if you look into sort of the warnings that have come out of the ECB and the way that banks talk about this.
Yeah, no, yep. I think, yeah, regulators have a big part to play. Although, you know, they're generally, certainly in our dealings with the Dutch Central Bank and the FCA, two sort of European places where we're regulated, they're you know, they're really keen to learn more, and they are very, very focused on customer outcomes. So if you can you know, make a good case for better customer outcomes, then I've always found regulators pretty open and flexible. You know, not all the core stuff. You know, you got to keep customers' money safe. You got to keep the good money in and the bad money out. But generally, if there's, you know, there's new stuff that you want to do, they're pretty progressive, forward thinking. Yeah,
no, I recognize that as well. Although they don't really like the idea of actually pushing the incumbents out of the market as well. So if they feel that the competition is too fierce, they will also protect that a bit. But what's kind of understandable as well, that because real disruption, how appealing as it sounds from a startup perspective, is probably not what we really want in the financial industry, because people would just want, you know, their payments, their credits, and so on to stay in operation.
Yeah,
so I think it's interesting also maybe to pick on your investment background. So we saw also that there's still loads of money being invested over the past, also in the second quarter. So what's your view on that? Why do you believe that these deals were already in the making, or do you also think that some new deals were popping up?
Well, it's kind of like, it's surprising, I think, to all of us that, you know, back in the sort of the crazy days of the beginning of April, we would have expected precipitous decline in investment levels, and that hasn't happened. Also, the stock markets are way up, which is always, you know, important for private capital markets as well. So, I think most of I think most of the deals you saw in up to June, July were probably pre-existing. A lot of people either were just going through the final diligence piece, or they'd already got existing investors who did secondary buyouts or follow-on rounds. I think actually what you're seeing now is a few deals that must have been done mostly digitally. Now, I'm not saying that they didn't have pre-existing relationships with the investors, but the sort of moving from a conversational level to a sort of, okay, let's do this, let's do some diligence, let's dig in, let's understand the business and make an investment. Some of those have happened completely in lockdown. I think the good thing for technology companies, particularly fintech companies, is we just generate so much data. So, you want to answer to a question as a potential investor, it's very easy to, give you the chapter and verse. And I think also, there's also, over the last 5 or 6 years, you've seen a lot of US firms come over, do more in Europe. And a lot of those relationships are by their very nature quite remote. The investors might come over once a quarter or once a year, but so people are used to dealing remotely. So there's been the strong, steady stream of money going into deals. I think the difficult area is probably in the early stage, the really early businesses, or the Series A, Series B, where companies are sort of up and running. They need to raise additional capital, but actually that capital is hard to get because they're still losing money. They haven't maybe completely proved out product market fit, and those are the firms that are really struggling. If you're a larger firm, it's much easier to raise follow-on finance, and the growth stage has just been going crazy lately. So even in my sector, you've seen some sort of you've seen M&A, and you've seen pretty chunky funding deals happening.
Well, I think especially indeed where new relationships were required, I think it's still quite tough. I hear quite some entrepreneurs also, especially in the B2B space, that want to do new deals with customers, struggle with building new relationships. And I think probably also from an investment perspective, that's similar. But indeed,
I mean, I'm reasonably cheerful on that. I think selling B2B at the moment, super hard. But, if you look at how much capital is sitting on the sidelines, needs to be deployed across Europe. And, people want to do fintech deals. They want to do healthcare deals as well, but they really want to do fintech deals. So I know it's disheartening for sort of early stage entrepreneurs out there, but there is capital there, and it's never easy to raise money, and people always make it look easy and say it's easy after the fact. It's never easy. It's probably got a little bit harder. The bar has probably raised a bit, but deals are getting done and people are funding stuff. So.
Yeah, no, I believe so as well. I think definitely it remains a really strong area, especially as digitization continues to sweep over the financial industry as a whole. I think it will remain very strong. I think we're almost at the end, Michael. Is there anything? Do you have any sneak preview news? Any scoops that you can share with us on things that are coming up on your side?
I haven't got any scoops, but I tell my team, I just think this quarter and the next quarter are going to be pretty amazing and interesting for the financial services industry as a whole. I think the Ant IPO is super interesting. You're also seeing, lots and lots of tech companies out of San Francisco. Airbnb sound like they might IPO. Snowflake, we've got Palantir. So it's just a really interesting time to be working in technology. And I think, yes, it's going to be pretty hard. The weather's going to be rubbish. The economies are probably not going to be going brilliantly, but there's still this sort of underlying story of consumer technology and consumer fintech, which is just makes it an exciting place to work. And I think we can all count ourselves very lucky that that's where we've chosen to build our careers rather than some of these other sectors. So I've lots of reasons to be cheerful. Maybe not any scoops this time, but next time I'll come on and I'll let you know what they are.
Well, cool. Thanks a lot, Michael. I think as well, we should definitely be positive. It remains a roller coaster with ups and downs along the way, but it will be interesting for sure. So
looking forward to Amsterdam FinTech Week as well.
No, exactly. We're very much looking forward to that. So for all the listeners, indeed, 18th to 25th of September, we'll be having the Amsterdam FinTech Week. And Michael, we'd love to see you and the people from Azimo there as well, of course. So very much looking forward to that. Yeah. So thanks again for today. I think it was really great what you could share with us, your insights on the work that you do with Azimo and the rest of the fintech field. So I hope you enjoyed it as well.
Thank you for having me on.
Yeah, you're much welcome. Looking forward to catch you again soon, also in person, of course. And thank you all for listening in, and look forward to see you again next